Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. A couple of weeks ago, 12 days ago exactly, Uncle talked about how bearish season is here. You can see on my thumbnail. And boy, oh boy, did that worked out beautifully. Worked out beautifully. And why did I say it was bearish season? Well, it was because Uncle was tracking seasonality, the average of the last 20 years, the average tendency for SPY for the last 20 years. And the latest update is that seasonality tracked. But now we are entering in early October, where according to seasonality, we are expecting some type of dead cat bounce. It's a decent sized bounce, but it's going to be short lived, and it's going to send us back down before second half of October. It's going to send us back down lower, and then from there we should find a bottom heading into a bullish fourth quarter. Now, an example of this would be last year, a year ago. If we go back a year ago, you can see here the end of September was bearish. And then heading in October, we got that bounce. A decent sized bounce, but it was short lived, just like seasonality suggested. Sending us down to a lower low. And then right before the second half of October, we start getting bullish with a bullish fourth quarter. So did last year did it track with seasonality? Absolutely. So now the question is, will history repeat itself, or will this year be different? So far this year, seasonality has been right more than it's been wrong, but you guys can see it can be wrong. All right, probability is that it will be right. It's a higher probability that it will be right. Okay, but we'll see. That's why we got to combine this information with the price action. All right? So, yeah. The last time when we got this drop down to 348.11, it was due to CPI. Okay? And then we we just rolled up from there, as you guys can see in hindsight. So we got CPI coming up. PPI is on October 11th. CPI this year is on October 12th. Definitely got to pay attention to that when the time comes, okay? But that's on October 11th and 12th. We got some time before that happened. So, can we get a bounce like seasonality is suggesting? Well, let's take a look at the recent price action. As you guys can see, my orange trend line connects from last year of October 2022 low, connect to March 13th low. And we recently been testing it lately. So far, bulls are stepping up. And this orange trend line has kept SPY in a bull trend. And here we are getting another test at critical support level. And it was beautiful. We tested it and we got a little bounce up. If we look on the smaller time frame, 15-minute chart, right? I gave you guys my levels. I had mentioned 425. I mentioned 423.5. 422-ish and stuff for the lower targets, okay? Some people, they hear my levels, they don't know what to do. And some people, they hear my levels, they know exactly what to do. And we use these pivot levels to enter setups. Setups for either bullish setups or bearish setups. And one of my favorite setups is the false breakdown setup. So you can see on the daily chart that we washed below that orange trend line. That was around 425. Okay, the green line right here is 425 at 423.5 below, okay? You guys can see that on this candle, on Wednesday's candle at 1:15, we broke below 423.5, okay? And then at the 2:15 candle, we recaptured 423.5. False breakdown setup. If you guys need an example of a false breakdown setup, look at Wednesday afternoon's price action. False breakdown. And it also recaptured 425. False breakdown. Because you guys can see here, we broke it down. And then later in the evening, or afternoon, excuse me, we recaptured false breakdown. False breakdown triggered a nice move, going as high as 431.99, almost 432. So relief bounce. There's the relief bounce. So are we going to get more relief bounce according to seasonality? Well, we got to combine that with the price action. And I got resistance at 428 and 429.6. If I zoom out on my charts, 429.6 is the 61.8 fib level from all-time high down to October low. So if we are going to get a bounce up higher, that level must clear. Okay? And of course, we need to clear that 431 level. That was a pivot low from June 26th. Now, if you're wondering, what do we do with these levels? Well, when we break out of a resistance level, that's when we want to look to long. All right? We play it level to level style with runners. So if you long 429.6, you want to take profits around 431-ish. Leave runners in case the market goes higher. And if the market goes high and give you a home run, your runner will catch it. And remember, if the market is going the way you want it to go, you can always add to your winner. But the point is, you play it level to level for risk management purposes. Secure profits, be safe, no greed. You leave runner in case the market goes more in the direction you want. Okay, it's conservative, it's safe, it's no greed policy. The point is to build consistency. Okay, to build consistency so that when you build a good consistency, you'll be able to scale up. All right? It's a process. To be a good trader is a process. Whoever is telling you promise you Lamborghinis and private jets, you might want to stay clear of those people, okay? I'm trying to be realistic with you guys. Trading is a get rich slow scheme, not a get rich quick scheme. And that's what it's about. Building a system and building consistency around that system. I play the sheep style system. That means we follow the price action. We trade it up or down. It don't matter. Level to level style with runners. Okay? So you got to know the levels. You got to know the setups so you can trade it unbiasedly like a sheep. So like I said, 429.6 and 431 clears will likely go up higher for a relief bounce. And I got 433 as a resistant level, pivot low from August 18th. Above that, I got 435 pivot low from August 25th. Okay, these are like supply and demand zones. Think of it like that. 435 and above 435 is 437, which is my 78.6 fib level. If that clears, we could go and test my white trend line, which is around 440 to 440.5. Okay, my white trend line. Here, touch here, a bunch of touch here. We broke it down. It led to a nice move to the downside. So we could back test it. And if 440.5 clears, guess what? Then that puts the next level in play at 442, which is the 61.8 fib level. All right, we play it level to level. And based on this setup, we already tested that orange trend line that kept SPY in a bull trend. Follow through would be to clear those resistance level 429.6, and that's when I would go long. All right, now as far as being bearish, you want to see SPY stay below obviously 429.6 on any bounce. All right, it already broke down the 428 level, so from here it needs to break down 426.5 and 425. Below 425 is a breakdown of my orange trend line. And it could be a sign that this bull trend is over. Okay? Remember with Apple. We'll go to Apple real quick, okay? Remember it was in an uptrend. And then when it broke that uptrend line, it gave us a beautiful move to the downside, as you guys can see in hindsight. So that's the same principle, same approach that we're going to go with for this trend line for the SPY. So below 425 is extremely bearish. All right? Above 429.6 would be good follow through for the bulls. Okay, level to level style. All right, we'll take it one day at a time, and then I'll update you guys again the next day. Okay, I'm back from vacation. All right, so you guys are gonna hear a lot more from me, and I hope to see more from you guys as well. Okay, so you got my bull case, you got my bear case above 429.6 and 431. It's bullish. I'll favor more upside. All right, level to level style. If we break down 426.5 and 425, that is very bearish, and I would favor more downside. 429.3 is the first support level. We have a gap fill back from June around 421.8 to the 422 zone. And then the next fib level is at 420.4. Then I have another fib level at 418.3, 417, 415, and 413.7-ish. Those are the lower targets. Okay? That's if we lose 425. All right? So I'm giving you if statements. I'm giving you both scenarios. As traders, as sheep style traders, our job is not to predict with crystal balls or imaginary whatever figures of our imagination. Okay? We are looking to react to whatever the price action does. If it breaks out of resistance or if it gives us a false breakdown setup, we look to buy calls. If it breaks down on support or we get a false breakout setup, we look to buy puts. We are looking to react level to level style. We trade tactically, strategically. All right? No greed. Now, moving on to triple Q. It managed to gap up on Friday, but did not clear any significant resistant level. And that's resistant level I'm referring to is the 78.6 fib level at 360.3. Gapped above it, but did not close above it. Closed around 358-ish. Okay? So I have support at 357 and 354.7 to the 355 zone. If those levels fail as support, I would look to short. Definitely below 354.7, I'll be bearish and favoring 351 and possibly down to 349. All right. Now, if it can recapture 359, that's a resistance level I got at 359, and the fib level at 360.3, I would look to long, and we could possibly go up and test 361.5, 363, 365. 366.5, and I got a resistance level at 368. We play it level to level. So, yeah, above 359 and 360.3. Look to long, level to level, leave your runners. But then again, you can do what you feel is best, all right? Overall, below 357 and 354.7, I would be bearish. I'll be looking to short if those levels fail, all right? Dow Jones, looking bearish to me, all right? Watch out for a gap up because, market makers like to play tricks. It's looking bearish right now, but it could change on Monday. If it does change on Monday, right, the levels that it needs to get above is 336, 338, and 336, 337.7, and 339. Okay? Let's say that one more time. 336, 337.7 and 339. For the people that don't like it when I repeat myself, remember, I'm making videos for a lot of people, not just for you. Some people need me to repeat. I'm just trying to accommodate, okay? I want to make sure we get the information. So above 339, I would be bullish on Dow Jones and favor more upside, maybe back up to 342.5, and maybe, just maybe, fill that damn gap at 344. All right. Overall, as long as below 336, bearish follow through would be to break down 334 and 332 to put 330 and 328-ish in play. Lower than that, I got 325.8 as support. All right. IWM looking bearish. Bearish follow through for Monday or at least next week will be a breakdown of 176.5 and 175. If those levels fail, guys, we're seeing a lot more downside. Look to short with 173.5 and 171-ish in play. For me to be bullish or favor some relief rally, I need to see it above 177.7 and 179. If those levels clear, we can fill the gap at 180. There is resistance at 181.6. If those clear, then that'll put the higher target into play, okay? Up to 183.7 and a critical level at 185.5. Tesla gave us a gap up and looking like a big old choppy candle doji. All right, it's around 250 right now. I do have support at 248.5 and 247. 248.5 and 247. If those levels fail, look to short with 245.5, 244, 242, and 240.7 in play. Now the critical level is 240.7. If we zoom out a little bit, potential inverse head and shoulder pattern. For me to cancel this pattern, Tesla needs to get below 240.7 and put lower targets in play, 239, 237, and so on, all right? But as long as above 240.7, the inverse head and shoulder is still possible. Keep in mind this is a daily chart, so it would take some time to play out, okay? Bullish follow through for the short term would be to stay above 250. I have resistance at 251.5 and 253. If those levels clear, look to long with 255 and 258 in play. Above 258 would put 261 and 263 in play for the gap fill. All right? Apple, looking bearish, looking like it's still giving us a correction from that January low to that July high, looking like it's in correction mode. It recently tested my 38.2 fib level at 170. That is the level that must hold if you are a bull. That is a critical fib level. If 170 is lost, very bearish. Okay, very bearish. With 168 in play first, and gap fill is at 165.6. Below that, I have 162.7 and 161.2 as support. Overall, below 170 would be very bearish. Now, resistance at 172 and 174. If those levels clear, look to long with 176, 178 in play. Possibly go test 182 and 185. Above 185 would be a breakout of my my blue trend line, a breakout of my blue trend line and a sign that the correction is over and Apple is likely to go up higher. So it needs above 185. That's a lot of work for bulls to do. In the shorter term, 172 and 174 are the levels that must clear for bulls, and 170 is the support level that must fail for bears. NVDA, I got an orange trend line here, starting from May 25th low, have it connected to June 7th low, had a nice low touch here, battle here back in August 11th, and it also touched September 28th's high. We tried to gap above it, didn't quite close above it though, okay? Overall, bulls need above 437 to recapture this orange trend line. If above 437, bull bias. I am bullish on NVDA. All right? Above 437 puts 439, 441, 443, pivot low here. And possibly back up to 449. Above 449 would be very bearish. That's a fib level. Okay? Overall, to keep it simple, above 437 is bullish. Now, below 437 is obviously bearish. And follow through for bearish signs would be a breakdown of the next support level at 435.5, 434. What do I have here? 432.5 and then 430. Below 430 would be pretty bearish. I'll favor more downside for NVDA. Possibly target 425 and 423.6 minimum. Will likely go lower than that though. All right? Microsoft. After breaking down that 317.6 level, that's my 1.236 fib level, yesterday we back tested it as a resistant and found selling pressure. Still overall bearish. To turn this around, price needs to be above 317.6 and preferably also clear resistant at 320. All right, that's the only way I'll be bullish on Microsoft right now. Recap to 317.6 and preferably clear 320 to put 321.5, 323, 325, and a back test of the 50 DMA around 327. All right, needs to be above 317.6 first. As long as below, that's our equilibrium level. As long as below, bearish. Next breakdown for bearish follow through would be 315. 315 fails, there is a gap at 313.5, and if that fails, 311.8 and 309.5-ish are all in play. All right, Amazon. Looking bearish, okay? If it wants back to get back down for more downside, support at 127 must fail and 125 must fail, as well as 123, right? 123 defended recently. This was Thursday. 123 bounced. So a loss of 123, that's a pivot low, would definitely be a bearish sign that we're going to head down low at 121 and 118.5 as a target. Now, if we stay above 127 and we can clear some resistant levels starting with 129 and 130.5, I would look to long. With 132.6, 134, and gap fill at 135.2-ish in play. Google. You guys see my pink triangle pattern? We gap below it. Bearish breakaway gap. Recently back tested it. We also back tested my 1.382 fib level, around 135-ish or close to it. That defended. All right. Overall, looking bearish. So as long as below 132.8, I'll favor more downside. Support is at 131 and 129.5. Loss of those levels would be the trigger to enter puts. Put in 126.6 and possibly down to 124-ish in play. I'll only be bullish above 132.8, recap to this fib level, and recap to the triangle, a descending triangle, which is at 134. All right, above 134, there maybe bulls will have a shot to head back up, possibly up to 137 to the 138 zone, possibly. But it needs to get above 134. Otherwise, below 132.8, stay bearish. Netflix. Well, it broke down a fib level around 379.4 to the 380 zone. As long as below that level, stay bearish. Bearish follow through would be a breakdown of 375. We break down 375, we're going to drop a lot lower to 371, possibly even to 363.7-ish. Why that level? Well, my orange trend line, you guys can see here, has kept Netflix in an uptrend. Multiple tests. Can we get that other test? That will be around 363.5 to 364 zone. Let's see. So stay bearish below 380. However, recapture 380, might get a bounce back up to 386 to 387 zone. Above 387 will be a recapture of this triangle pattern. Put in 395.7, 398, and possibly 400 and 401.6 above. Okay? Meta. Still rejecting from my white trend line here. It's not looking bullish just yet. Okay? A breakdown of the next support around 298 and 296.5 would be the bearish trigger to enter short positions. Targeting 293, 290, 288, and possibly down to 285.6. Okay? I will get bullish if we can finally break out this white trend line. It needs above 309 and 311 to clear. It could possibly head up higher, okay? Up to 316-ish, 318, and maybe 321-ish. It'll be a nice move, a nice breakout. But it needs above 309 and 311. AMD. Another rejection from my yellow trend line. You guys see here, test here, test here, test here, test here. That's like 1, 2, 3, 4 tests. And on the 5th test, you think it'll break out. Nope. No breakout. Probably a lot of liquidity building right now above this yellow trend line. So keep that in mind. Watch out for false breakouts. Or finally, if we do get the breakout, That will trigger a lot of those stop losses. But yeah, overall, still looking bearish. Okay? To break out the yellow trend line, needs above 105. So basically, as long as below 105, bearish on AMD. Follow through would be a breakdown of 103 and a 101. If 101 fails, 103 and 101 fails, 99.5, 98, and 96s are in play. Bearish. And we might even get a lower low down to 92. Alright? Does that make sense? Below 103 and 101, get bearish. Look to short. Can't get bullish unless it's above 105 for the breakout of this yellow trend line. Okay, guys? Now, here is the dark pool. 427.3. We had 2.5 billion in premium. 427.48, 1.4 billion in premium, and 428.46, 1.3 billion in premium. Add those levels to your charts as dark pool orders. Let's take a look at the flows for SPY. Filter it for 500k premiums or above. Cool. Bearish heading into next week. Interesting. QQQ is also bearish. IWM is bearish. Dow Jones is bullish. What? Tesla, kind of bullish. Apple, bearish, kind of bearish. NVDA, bullish, 67.6% for the calls. Okay. Microsoft, bullish. Amazon is bullish. And of course, my first day back in a week, and this thing just crashes on Uncle Charter. Sorry, guys, I couldn't get you the rest of the flows, all right? But I got you the price action, I got you the dark pool, and I got you the plans for next week. We will talk again. Next video will be out Monday after market, okay? Hope you guys found value in this video. Have a great weekend. Peace.